I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward at what might happen in coming weeks. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market gyrated last week, ending mixed, really at all-time highs, as a firm start to the week saw a midweek drop, with Yellen veering off the Fed game plan and then quickly getting back in line. That could actually be the real plan, as the Fed's mission seems to be policy change preparedness. That's a lot like earthquake preparedness, but you don't get in a bathtub or stand under a door jamb. Maybe you just lighten up some on positions. And that was really the tone for the week, as there was a massive amount of Fed chatter going on that really was moving the markets almost every day. Monday we saw a big pop as the dollar fell hard on weaker economic data, and that of course helped the gold and silver market because they love it when yields come down. Silver actually had a huge pop. It was up some 5% at one point, and it had a couple of really big days this week as investors saw other commodities flying on the upside, and they didn't want to miss the opportunity of silver going to $50 or more, which could actually happen. But the NASDAQ had a big reversal then on Monday, and stocks only ended modestly higher, and NASDAQ may be an important signal. I've got more to talk about on that coming up. Tuesday was a technically important day, as the NASDAQ had a technical short-term breakdown. I'm going to show you charts about that later in the show. And modest selling in the morning turned into a very sizable drop as the S&P 500 got down as much as 66 points after Yellen comments. She said interest rates may have to go up to prevent the economy from overheating. Well, the market had fallen very hard. It did rebound as she walked that back, almost like she had a talking to, or again, she's on this plan, as a lot of the other Fed heads are, to try to soften the blow of what's coming in policy change. The S&P rebound only brought it down about 24 points on the day. Still, damage was done, however, as the NASDAQ breakdown and the meaningful fall might mean something that is more important than most investors know right now. But as far as Yellen goes, well, basically we know her true sentiments, don't we? As she let that leak out. And later in the week, Brainerd, the Fed Brainerd, got in line on similar talk also. Wednesday, more and more Fed chatter as early in the day, Fed Evans said inflation won't hold. It is, of course, as Powell says, transitory, and the Fed will stay easy. But later in the day, the market fell. This is on Wednesday. Fed Bowman says the economy is stronger than March expected. It's unbelievable how the market is moving based on these little whiffs and whims that come out of the Fed. Thursday, it was more of the same, but a strong close saw the S&P 500 up 34 points on the day. There was early weakness that came, and this was interesting because what helped the market go to the downside early on Thursday was weakness in the cryptos. There was a comment out that the SEC said that they should regulate the crypto exchanges. That had crypto falling very hard, and of course that is part of this whole speculative mania that's going on in a lot of areas. And that broke the market, and later on, of course, the Fed decided to step in, and Fed Bostic said it's too soon to taper, and then the text bounced, and banks and IBM took off on the close, and the Dow moved to a new high, an all-time high on Thursday, and that's after all of these gyrations. But there is a lot of disparity in the indexes. Friday, the market was expecting a payroll number that was between a gain of 1 and 1.5 million jobs. They expected a huge number. It came out at only 266,000 jobs created, which was a just absolutely huge disappointment. Of course, investors saw it that the Fed won't act soon, and tech stocks took off. Up a couple hundred points early, they backed off and then moved up again. And they're up close to 200 points now at midday as we do this report. When that news came out, the bond market exploded to the upside. In fact, yields fell below 1.5%. But then the bond market pulled back. It's up right now a little bit on the day. The gold and silver market took off again, and they backed off a little bit, and Bitcoin got a sharp rebound, up a couple $1,000, and then that lost about half of its gain. So a lot of fluctuations here on Friday. When that news came out, part of what's had the bond market move up and then move down again was that wage growth was really big. It was up 0.7%. This is really an unbelievable period, of course, because the government is paying people to stay home. It's a high unemployment, as they say, and we know those numbers are high, relatively high at 6.1%. But at the same time, there are a lot of jobs available. Everywhere you look in the restaurant business, there are signs up for hire. So there's a high unemployment and a worker shortage. It's a crazy time that we live in right now. So when the market moved up, it ended up continuing to move, and we have a stronger day today, as we have the Dow and the S&P 500 making an all-time high. The Fed noise that we're hearing, this is bringing a lot of thrashing in the market right now. Fed heads, Yellen, all of them are signaling policy change ahead, and they think they can buffer it. Well, good luck with that. We saw what happened in 2018 when they began a taper, and this market is now 12 years off of its low in 2009, and there is a bear market ahead. Probably going into 2022 or even later. The question is, how long can it chop first at these all-time highs that it's sitting at right now? And all along we've been talking about May, June as a time that the market would make its peak, and we're not coming off of that projection. Coming up, we're going to look at a preview of the international markets, as Arvi did a fantastic job again with a great video. He's going to show you a couple of those. I'm going to look at Starbucks and coffee. This is a very interesting comparison, which has the Starbucks stock potentially as a sell. And also, we're going to be looking at a comparison on the short term between the S&P 500 and the NASDAQ. And as I said, the NASDAQ had an important short-term breakdown, and that could be a signal for the market. Now, the NASDAQ is moving up today, rebounding nicely, but overall that pattern is not pretty, and I'm going to show you what that looks like. For the week, the stock market, S&P 500, is up about a little better than 1%. The Dow Jones up better than 2%, but the NASDAQ and the Russell sitting fractionally lower, not big changes on the week, and because those are the lagging indexes. Bond market, big fluctuations, as I said on Friday. It does gain about 1.5 points on the week for the 30 years. 10-year yields drop sharply, trading as low as 147 here on Friday, now trading at about 1.54, and that's down about 9 basis points on the week. Gold market, nice surge, up about $65 on the week. It is at some big resistance, or closing in on it, up around the 1950 area. So we'll see if it can get through there. It's actually acting much better than it was, but silver still, to me, is the better trade, up 37 cents on the week, and we still think there's some number of weeks to go on the upside in the silver market. Dollar absolutely hammered on those employment numbers. It falls about 1% on the week. Just very weak technically, and we talked about that. And if you are a level 4 member and you get our Slim Ribbon PO, it has been giving some sell signals in there, and there's a lot of weakness. The Slim Ribbon and the Slim Ribbon PO are probably the best momentum indicators you will ever see. And that has been signaling the weakness that we saw in the gold market. I'm sorry, the dollar market. And today it is down about 0.8%, all on this one day. That's a big decline for the dollar here, and that's all about the softness in yields and the weak employment number. Oil up about $1.10 on the week, even though Wednesday, Thursday, and Friday the oil market had a pullback, though here on Friday now it has regained those losses, and it's up a few pennies on the day. So the oil market we have been positive on, and we still think that oil is going to go higher. That is the opening of the show. We've got so much to show you coming up, and I want you to stick around through a couple of these little short promos that we're going to show you, because we have some very, very good specials that we're offering for traders at all levels. Please do go to the askSlim.com website and explore that, and make sure you subscribe, be a member at some level. If you're watching this on YouTube, please do subscribe to the channel and click on the notification bell so you know when we post one of our many videos that we do each week. And make sure you give us a thumbs up, like this video. On Twitter, follow us at askSlim. And for questions that you might have on our memberships or anything else about askSlim.com, write to Matt at askSlim.com. And our first of our little specials we want to mention is our level 1. This is the great introduction to our services, education, and analysis. You're going to get our amazing Slimulator momentum tracker for position traders, longer term holders, investors, with some of the best scanning and sorting for momentum that you have ever seen. It gives you our sum of the evidence, directional bias, on these many stocks and groups that are in there, and you will find it absolutely valuable and fascinating. You'll get our weekly report, stock index report, ETF review, access to our trader workbench, which was really the hub of askSlim.com, and our special Market Week archives. You'll get our replays on our live events, and some other special videos. All of that for just $14.95 a month. Subscribe for 3 months for $30, $10 a month, and you're going to really get some good introduction to who we are at askSlim, and I think you'll find it very valuable. So do become a level 1 member if you are not a member, or maybe a free member at askSlim. All right, so we're going to look at a very interesting video right here that is essentially a presentation from Arvi, who does fantastic analytical work. He is our other cycle analyst specialist, and he brings this video to
So this is the German DAX. What we see here is a really positive overall situation here in the DAX. You can see this beautiful base that formed here on the weekly. Then we got above that old high and then really moved up nicely on the upside. What we're looking for at this point is that we are getting late in this intermediate term cycle here. We will look for a high to form and then for a rollover back on the downside to really test this rising intermediate term support zone from around 14,683 to 14,174. We would look for that zone to likely hold us on the downside. And then given this longer term positive cycle structure that we see here, we will look for new swing highs to form out into this next rising phase here that goes out into the late summer, into the early fall. So this is a longer term, very positive pattern still in the German DAX. If we shift over to the daily chart, what you see here is a breakdown. So that selling that we saw in the US markets did send Europe lower here as well. You can see the breakdown through the prior cycle low here at 15,071. That says that this rising phase is likely over, and we have entered into this corrective period here on the short-term basis. You can see we had a little bit of a mini bear flag forming here, we would look for this to turn back down on the downside in the German DAX. So a pretty risky pattern setting up here on the short term, but as I mentioned, in a longer term, very positive overall pattern here. Okay, so this is the Bovespa. What we see here is a dominant weekly cycle, which is then broken up into these minor half cycles. And we are getting late in this dominant cycle here. We are looking for this to really be a bear flag that then turns down one more time and then likely sets up a really nice long side opportunity here in the late summer to the early fall, back to the upside. This is something that we'll be watching very closely. If we were to get a movement back on the downside here, we'll be watching this 113, 132 area for the level that it'll likely hold and then move back up. So this is a super positive longer term pattern. And if it were to get that dip, that does look like a very nice long side opportunity here in the Bovespa. If we look at the daily chart, if I modify these axes a little bit, you can see that we were looking for a short-term low to form. The short-term low was due 422 to 5.3. The low formed just about 1 day late right there, and then we're getting this nice rally back on the upside. Now, what we're looking for is, as I've noted, this short-term low was a little bit late to form, and that is a bit of a negative warning. So we're looking for this to get a rally, then to form a high early in this cycle, and then to rotate back on the downside. That's really the overall picture here in the Bovespa. We're looking for likely one more test of those old highs, which come in at around 121,471, and then a rotation back lower. So let's say we do get that rally, and then we crack below this daily cycle low. That would say that this 113, 132 level, which is the intermediate 38.2, is in play here on the downside. So that's really what we'll be watching closely for, is for that rally on the daily time frame to then fail and then roll back down.
Thanks, Arvi. Again, that is some great work by you. And you can see all of Arvi's work on these international markets, 10 different countries that he looks at, these important indexes, by becoming a level 2, 3, or 4 member. But we always want to share a couple of those with you so you can get a good sense for the type of work that we do and that Arvi does. So really, really good stuff. All right, so now we're going to move now into the next piece that we're going to look at in here, which I thought was really important because there's a lot of work that we do, and if you watch our videos, especially Future Speak, you get an idea about our focus on correlations. We always are looking at how one market affects something else, as we need to have guides for our trading as to what the greatest influences might be, because that helps us with the higher probability entries and directional biases to our positions. So we're always looking at that, and I'm always commenting in that, especially in that video on Wednesday. So when I'm looking at movement in commodity prices, I'm often looking at stocks that are relative in those particular groups. And coffee has had a price surge. And we were actually looking for that, and it really, really went well. And that is meaningful for Starbucks, because Starbucks, their biggest input cost is the cost of coffee. And when prices go up, well, they either have to pass that on to the consumer, which of course is price inflation, which we're experiencing. And if they can't do that, then their margins get squeezed. And it's often that they can't raise prices quickly enough to compensate for that. We see that in other industries also, often see that in oil and refining industries, where if they don't have enough oil saved up and prices jump up, the refiners get squeezed. So we look at a lot of that, and we see that. In this case, we're looking at the coffee price in Starbucks. We're going to start with the chart of Starbucks, and it gives me the opportunity, again, just as Arvi did in the last video, to do a little teaching around cycle analysis. So this is a Starbucks, and we're going to look at the weekly chart first. If I go back, you'll see on the left was the weekly, and on the right was the daily chart. We do analysis always on at least 2 time frames. So here you could see the rhythmic motion in SBUX. This bigger arc on the bottom is called a cycle bracket. That is simply a guide. That is not cycles, that is a guide to cycles. And what that says is that there is a dominant rhythm that you can see. And what we're looking at is how it resolves itself up here. Nice diamond pattern look right over here, which is a consolidation. This is the momentum indicator and shows you where momentum is up and going strong, and the momentum is still strong. Now, interesting, you'll see when the cycle peak came right over here, it made an engulfing. Here we had an evening star that formed right over there. So this is the first sign on an intermediate chart that SBUX could be peaking. Now, the next sign would be a breakdown either on the short-term chart or a breakdown in momentum as this indicator would then turn down. Now you can see the minor cycle movement right in here and how that resolves itself right in here. Here is your minor cycle right there, looking like it's kind of made a low right over here. It tries to get up a little bit more here and then likely turns down right there. That is a significant a piece of information because these supports right over here would be the downside target in the SBUX market. So that to us points down to about something like an 8 to 15% loss coming up in SBUX over the next couple of months. So the window for that decline right over here is coming in here between mid-June and mid-July. So we believe it's topping, and we believe it's going to decline into this time frame window right over here where these two cycles nest. Like what happened in here where there was some selling that came in, but this was very strong. And what happened right over here where selling came in, and that also was very strong. Hit supports and then moves up. So we believe based on this intermediate pattern that a topping condition is there. Now let's look right over here and look at the daily chart. You can see that this also has cycle rhythms in there. Well, there are actually two of them that we have in here. They're out of phase, as we call them, because the short cycle, that blue dashed line, you can see how it trades right in here, and it's now in a rally phase, but it's not able to get up very high. And upward momentum right over here where we're getting some buy signals has now neutralized. Now, this is the slim ribbon, and that's where you get the momentum condition, and you can see here it has begun to neutralize right there. And what this says to us is that there was some important low right over here, which it equaled at this point, that this is simply like a little bear flag, and this is likely to resolve itself on the downside again. This points to this declining phase, which is about 6 to 8 weeks long, being made up of a decline right over here, a rally that fails, and then another decline following that to make the low. So that means that SBUX has a high probability of being a sell right now for short-term traders, and for intermediate traders, if it got a little bounce in here, it might be a selling opportunity after some decline. But overall, this has a lot of indications to us of topping. So we said that the real influence in here is the market goes to all-time highs, and now SBUX is beginning to languish, is the coffee market. So we're going to put up /KC. A lot of you don't have access to this if you don't subscribe to the ICE market, but we're going to, again, look at the weekly and the daily. So our analysis in here shows these big cycles. You can see that. And each of those cycles is made up of 4 minor cycles. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. This upward slope warned us that a lot of strength was coming in versus the downward slope in this big cycle. And we had indicated that that was a lot of strength. And what we saw was this beautiful pattern setting up with this diamond consolidation and then the minor cycle bottoming. We said we're likely to be moving up again. Momentum turns up, and our target up the area of about 150 to 160, and now we're even raising it up to the potential of 170 that you see right there. So this is the fib target zone. It gets up actually to those levels already, and now it could actually go to 170. This is only 4 weeks into this advance, and most of the advances are going to last much longer than that. So the next month and a half could get you 160, 170, as you see there. On the shorter term patterns, these are the cyclical patterns there. We have the weekly extensions put into that, and you could see the nice cyclical rhythms that are right in here, and the movement where you had the low here, the low here, the low here, hits the buy zone right there perfectly, and then turns up. Momentum strong on the slim ribbon. Buy signal right over there. This is the signal indicator for the momentum, and it says the price is going up. All of that very much in alignment when you look at the weekly cyclical patterns. Quite bullish when you look at that. You look at the daily cyclical patterns, momentum turns strong, and the prices move sharply up. Well, when the prices are moving up and likely to keep moving up, that is likely to squeeze the margins in Starbucks. As we look at that, it says to us, Starbucks is underperforming the market right now, and we know why. The correlations are there, the costs are going up for Starbucks, and that stock is going to have a hard time, we think, in the next, we'll just call it 6 to 8 weeks, with a pretty good chance it's going to lose somewhere between 10 and 15%, and we think that's probably a best case for Starbucks. Starbucks warning on a coffee price surge. I hope you found that incredibly interesting. All right, let's quickly talk about, this is a reminder about our Level 4 membership special, 35% discount for active traders, investors, and you get the slim charts. You get slim charts for the Thinkorswim platform on our 84 best traded symbols. You get support from me, from Arvi, from Matt. You can make custom chart requests for up to 2 of those a week. And just sign up for a TD Ameritrade account through the askSlim link, and we get credit for that if you don't have a TD Ameritrade account, and you'll need that to get our live charts. But you're also going to get everything in levels 1, 2, and 3, and there's a sign up link right at the front page. I just want to show that to you right over here. So here is the sign up link, special level 4 on the front page. And if you go over to the carousel, that little arrow right there, then you can keep scrolling over. Lots of information that we give you about us. And then click on this Thinkorswim by TD Ameritrade logo there, and it will take you to be able to open up an account at TD Ameritrade. That is how you will then get our charts to upload on that TD Ameritrade program. I'm going to quickly take you to our dashboard. And going to the dashboard, you'll be able to see what is included as a Level 4 member. This is the Level 4 all-in dashboard. Everything that we have in Level 1 and 2 are listed right over here. Our daily snapshot, our live stream broadcasts. I'm not going to show you all of these because it'll just take forever. We offer so much content. You can ask Matt about it all at matt@askSlim.com. We have our a Spider ETF review, our weekly outlook for the SIR. You'll get our market week minutes, future speak minutes. That's where you can go directly to the point on those videos where you want to see your symbol of interest. You're going to get all of our chart streams, our Slimulator ranking systems. I'm going to show you that one. Trade ideas, our Slimulator momentum tracker, chart streams. These are our live charts running. You don't need a special platform. You'll be able to watch some of our very key charts for trading, and you'll be able to make Level 4 chart requests. This is just fantastic. I'm going to give you a little peek at that. Somebody asks for a particular analysis. Somebody asked for ASML. So that analysis was given to them. They get a link to put up on Thinkorswim, and then these charts get posted right over here where it gives you that information on ASML. So that's for the chart requests. There's so much in here. I just can't even give it all to you. All of our proprietary indicators, you will get that as Level 4. in our askSlim library with over 500 videos in there. Just unbelievable information. Let's go to the workbench really quickly, and you'll be able to get a look at the workbench. And you'll be able to see that it gives you just a list of everything that's posted all day long. We don't stop giving you analytical things. I'm just going to go to the ranking system, which are those 84 symbols that we think are the best for you to trade, and give you an idea of the Slimulator ranking system. This has long-term, intermediate, short-term, and our option bias indicator in there. You want to know which are the strongest directional biases and what that information means. All you have to do, well, let's say, what are the most bearish stocks out of or symbols out of what we're looking at? And you can see in here First Solar, Netflix, Nike, Twitter, the dollar. Those are all extremely negative. You can see, in fact, the dollar is negative all the way across right there. You want to see by long term which are the strongest or the weakest. You can do that. And by the way, the strongest on our directional bias are Google, Goldman Sachs, Morgan Stanley, the financials, EWW. You get an idea of that. You want to know what the weekly chart is on Goldman Sachs? We'll just click right over here, and there it is with all of our work for you. You want to know what the daily chart is on Goldman Sachs with all of our work? You just click that, all of that. All of this included in your Level 4 membership. Just fantastic information that you're going to get. This is the Slimulator ranking system that has all that information on there, and scanning, just individual symbols you can look for. Just fantastic. This is a little different than our Slimulator momentum tracker because this has a lot more information in there. So that's the workbench right over there. And this is the askSlim site. You can just go up there to Level 4 Special and sign up using that. And if you have any questions that you would like to ask about all of this, or you somehow can't access the link, write Matt at askSlim.com, and he's going to tell you all about that. 35% off for new Level 4 members or upgrades from one of our other levels. Use that sign-up link. And you will pay only $101.25 a month versus our regular $159 a month, and that is a fantastic deal. It's amazing how much you're going to get, and for 3 months you're going to get such an unbelievable feel of the constant analysis and education that we send all day long, every single day, and all of the live things that we have going on all day long. So I think you're going to love it. Please do take advantage of this. Biggest discount we'll ever offer on this active trader investor membership with Slim's charts on the Thinkorswim platform. So please do open up a Thinkorswim TD Ameritrade account. Okay, last thing we're going to look at here is the stock market. Stock market having a good day today on Friday, and we see all-time highs in the Dow Jones Industrial Average and the S&P 500. The NASDAQ and the Russell are lagging, though they're both rebounding strongly today. What I want to do is, I have said many times that I thought that the May-June period would be the high for the year, that the second half of the year would be weak for the stock market. And we have looked for the stock market to continue up into this period, but then said we'd be looking for signs of topping. And I think the NASDAQ is giving us that first sign. So we're going to go back to this chart that I had coffee up, and we're going to look at the S&P 500 on a daily cycle chart. Now, what I want you to see here is the repeating 30-day average cycles. And we build these complex structures in there. And you can see that they have been rallying and continue to do so as you get higher highs and higher lows. Each of these yellow areas, or as you see in here, are the corrective periods where the cycles nest. We looked for a correction here, and it was far more powerful than we had expected it to be. And that is an indication that the market would move to a new high. And it's done so today, getting up to 42.38 on the S&P 500. Now, I want you to note the bullish structure here, the bullish or very bullish structure right over here. That's this cycle, and this cycle. We talk about the minor cycle. This was about 14 days right over here. This one was about 16 days. This one was only about 13 days. So it was really very strong right in here, and then began to move up again. So you can see again a positive cycle. We had projected that it could get up here to 42.90, 43.15. We thought the SPY would be about 430 as a potential. 423 was actually our area that we thought would be the area it would stop. It's now gotten above that. So this next area up here at about 42.90 up to about 43.20, we'll call it. One more number up here at about 43.45, which we doubt it will see. But powerful pattern that you see in here. Momentum strong. Look at the slim ribbon PO. Good signals, fantastic information right there as the momentum remains strong. And that says to me that the market, as far as the S&P 500 goes, is still in good shape. Now, I want you to really take a mental picture here. Positive cycle, positive cycle, positive cycle. Good, strong momentum, everything pointing to the upside. Now let's take a look at the very key NASDAQ, which has a very different picture in there. Here you can see, let me just blow this out a little bit more, that you have all of these cycles that were positive right here, positive right here. This one actually went negative, and that was a reason for concern. This is that little short, powerful decline that we saw in the market right there. And now as I get a little closer right here, this cycle has gone negative. And this important level right over here was broken 3 days ago, and we told our members about that, how important that is. And now it has rallied back. So again, we get about a 13-day low right over here and then move up. However, there's a strong likelihood that this sell zone right over here will stop the advance because this cycle now has a downward direction. If we're right about that, and this analysis continues to project as it shows right now, this will weigh on the stock market. And this is a non-confirmation really in these indexes, where these heavyweights that are in this NASDAQ index, in the we'll call them just these mega caps, are weighing on the market. Now there's some of them that are still okay. Google, as I showed you in the Slimulator ranking system, is still very positive. Some of them are okay, but mostly overall these are not. And you can see in here, as you had all these positive signals, this one now has turned neutral. It has not turned bearish yet. So lost its upward momentum, gave you a double top, broke a key level, and turned negative. All of that says the NASDAQ is negative now. And it's fairly likely that this rally that we're seeing here on Friday will fail today or fail Monday or Tuesday, and that we will not get above this sell zone, and that will be influencing the market to the downside. Remember that the heavyweights, these mega caps that are in there, if they're weak, they're going to influence the market a lot more than the recovery stocks or the value stocks are going to influence it on the upside. So the weight that comes from the selling that we're seeing in here in the NASDAQ is the overall negative force that we see. And there's clearly a directional component in here that has gone from positive and really strong to negative right now that allowed this breakdown. And again, nothing is ever written in stone, and certainly you've seen us say things that didn't work out right. But the probabilities are high that the NASDAQ is giving a bearish warning, and that in itself it is likely to decline. Projections right now to the downside over these next couple of weeks are to get down, best case, absolutely best case, around 13,350. That's like not even a decline from where it is now, with the potential of getting down over here about 12,900, losing about 800 points from here over the next couple of weeks, which really to me is a higher probability. So bad looking pattern here in the NASDAQ, in contrast to what we see in the S&P 500, and it says to us there is trouble out there. This is the only index that has this negative formation and that has broken down so far. The Russell got close, but then rebounded away from it. And even the S&P 500 got a little bit close and then rebounded away from it. But the NASDAQ is not able to do so. And this is a very negative pattern. And it is suggestive that there's a decline coming in the NASDAQ. And overall, the meaning to that would be the beginning of a top formation for the stock market. I said early in the show that the Fed heads and Janet Yellen are out there beginning to prepare us for a change in policy. That's what all this jabber is that's going in out there. And it just seems like they're all speaking randomly, but I don't believe it. I think it is a preparation for policy change, getting investors ready for that and trying to buffer what would be essentially them taking the needle out of the arm of the speculative bulls that have been driving this market up to some levels that are just beyond anything that makes sense historically. The valuations in this market are extremely high, and the timing, based on all of our work that we've been talking about, is getting close to this top period that we've been looking for. So that's the comparison. The NASDAQ much weaker and giving us signs. I hope you found that very illuminating, and look forward to your comments. Remember, you can put comments on YouTube, and I answer every single comment that is put on YouTube. So that's an invitation to you. That's it for this show. I hope you found it, as I said, illuminating. Make sure you go to our channel and subscribe on YouTube. Click that notification bell. Make sure that you give us a thumbs up on this video. If you want to follow us on Twitter, go to askSlim, and write to Matt at askSlim.com for membership info. Make sure you go to the askSlim.com website. Check out everything that we have there. I want you to be so careful because it is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been